Investors and traders, welcome to the channel Market Chart Pattern. In this video segment, we are going to take a look at the key US stock indices as we always do. For this video segment, this video is for educational purposes only and it is not a financial advice. New subscribers, welcome to the channel. Returning subscribers, thank you for watching the content. So we will begin to take a look at the key US stock indices, but we'll start with looking at and discussing a little bit about the US debt ceiling through the eyes of the charts and what they're telling us. So what we are looking at is the United States 1-month government bond yield. So this is just 4 weeks of movement in the yields, and what we can see is since the 24th of April, so pretty much about from 1 month ago, there has been a really sharp increase in the yields, and that it shows nervousness within the investors who are asking for more yield because of the issue going on with the debt ceiling, and this issue not being resolved as we move closer to the end of the month. Now the US has not defaulted in the modern history, so that's a good thing that the US has not defaulted on their on the debt. However, because of there is no clear communication coming out in the mainstream media as yet, therefore what we are seeing is some nervousness in the market, in the sense that the yields are beginning to rise a little bit, and this is also impacting over the last 2 trading days at least some sell-off in the equity markets that we have seen. Now, one of the things that I would like to point out is that in fact this is in a trading range, and here we go. And after having a pretty steep increase in yields, these are just in a trading range here, and any positive development in the debt ceiling issue coming out into the press will most likely suppress these yields, and that would be a positive event for the US stock indices as well. So another thing that I would like to point out is this is the chart coming in from investing.com, and this is the chart of United States credit default swaps, the CDS 1 year credit default swaps. What we are looking at is there has been a pretty strong kind of a rally in the prices, particularly over the course of last month or so. So we can see from the 28th of April thereabouts, and over the last couple of days we have seen the price come down a little bit, and today it went up a little bit. So although what we are seeing is the equity sell off, but the CDS, in fact, the price has come down. So what the market might be anticipating is some sort of positive development to come out rather soon as we move towards the end of the month. So let's go back to our charts, and we are going to take a look at the NQ. So here we are looking at the chart of NQ. This is the Nasdaq 100 E-mini futures chart. It's a daily chart, and it is for the 24th of May 2023. So here what we are looking at is a rally which has been going on since 13th of October 2022. So it's been quite a while, and we have a couple of ABCD patterns here. So the one in the black is actually 1.618 extension of this AB leg, highlighted in AB, in black, this one. And then we also have another smaller ABCD within the bigger leg of CD in orange here. And this one completed right where we had the on Tuesday 23rd of May, we had this strong, rather relatively stronger sell-off come in on 23rd of May. Now what we are looking at is per our work that we have done, we are looking for a stronger resistance to come in around 14,350 because that's the 61.8% Fibonacci retracement off the top right here, and also a 78.6% Fibonacci retracement coming in a level of confluence, so they are pretty close to each other. And also one of the things that we really like to watch is the market symmetry. So what we see here in the purple lines is whenever there has been a correction in this segment of the move, it has been of this much magnitude. So here we go, and here, and here. So what I mean by this is it is also, there's like a trend line support here as well. If the market begins to sell off more than this much, then in terms of market symmetry, we will need to begin to pay attention that maybe something is changing in terms of the market structure or how the market had been trending higher. But for now, we are still looking for 14,350 as being a strong resistance level. Okay, let's take a look at ES now. So in the ES, again, much like the NQ, the index has been rallying as of 13th of October. And what we are watching in this one is actually this ABCD formation highlighted in blue. Um, One of the key things for this pattern to remain valid is this 4060 level right here. This is the C level. This is point C, and for this ABCD to remain valid, this low should not be taken out on daily closing basis to the downside. As long as this point C remains, we think that we are in fact moving in this ABCD direction higher, which could actually see us go to about 44.30 to about 44.70, maybe even 4500. And also another thing to point out from a shorter term momentum perspective is, even though over the last couple of trading days we have seen some sell off, it has come in right towards the where the 20-day moving average is. And if we just do a retracement, what we see is price coming and touch right at the 61.8% Fibonacci retracement of this lows from the 4060 point C that we see here. So this is what we are watching in these main indices. Let's also take a look at the E-mini Russell 2000 small caps. So here, this index is actually stuck in a trading range for quite a long time. We had a really nice, beautiful ABCD formation here, ABCD, that marked the top. And for quite a while, in fact, from 2nd of February, 3rd of February, we have been just moving lower. And now it's been in a long consolidation in a triangle formation. And this kind of formation can actually last a lot longer than our patience can. So what we are really looking for a positive development in this index to take place is that if there is a breakout of this range to the upside, oh, the key important level is 1852, 1853. If the price is able to close above this on a consecutive daily closing basis, that's gonna be a pretty good sign for this index. And that's mainly because that's the 61.8% Fibonacci retracement of this entire swing coming from here to here. Momentum perspective, the currently the price is hovering around the 20-day moving average. From a shorter momentum perspective, if the on consecutive daily closing basis the price begins to close above that level, then shorter term traders will be actually looking at it as a positive sign from a momentum perspective to the upside. So guys, this is what we are watching in these main indices. And if you like our analysis, how we look at the markets, please do subscribe to the channel. And if you found this of educational value, then please hit the like button. It's just an indication to me that my content actually provides value. People find value in it, and it just encourages me to keep on making more videos for you guys. So thank you very much for watching. Good luck and good trading.